Hello and welcome to this first lecture of the new section on choice of right financial instruments. In this course on practical approach to investing your personal finances. So in this module, what we're going to do is to give you some in-depth understanding of how can you choose right instruments after having selected the right asset classes for you. And we had talked about that only selecting asset classes is not good enough. You need to select the right instruments within them, and that will help you decide where to invest your hard-earned money finally and maximize your return. In this lecture, what we're going to do is two things. One is to talk about what are the right instruments and why choose the right instruments. Why do we have to exercise this choice? Right. So, any thoughts on what do you think are the right instruments? So the right instruments are the final places where you invest, as you see on this chart. So this is a pretty populated chart, and you have come up a long way in deciding if you had some money based on your risk profile, let's say a balanced risk profile model 3, where you decided you would invest 33% in domestic equity in the bottom, 19% on international equity, 32% on fixed asset, etc., etc. Now, what you need to do is the ultimate investment doesn't happen only in domestic. You need to go and look for a fund. You need to look for a place. You need to look for a share where you would invest in domestic equity. So, what are those final places to invest is the question, right? So, what instruments are available is the question. If you have understood what are the right instruments, so what instruments are available? So let's look at how many instruments are available before we decide on what is right instrument. So if we look at each of the categories and types of assets, say fixed income, if you want to open a savings account in India, there are 196 banks where you can open savings accounts. So you need to choose. In each of these banks, you can have 5 types of FD. So you have 1,000 FD options at any point of time. Even government option, though there is one government, Central Bank of India, Reserve Bank of India, there's 61 government banks, government bonds that you can choose from. Corporate bonds, a large number. So many corporations, so many, they have their own funding needs. So about 5,000 odd. PPF, fortunately, is only one organization that issues PPF. Debt funds, 44 AMCs and 16 types. So an average about 350 debt funds are possible. ULIPs of all the three types, 24 companies offer, if you assume one, each of them offer one type of policy, there are 24 policies. Gold coin comes in 7 sizes, but at all these 196 banks practically, and unlimited jewelers. Bullion at all banks and unlimited jewelers. Bonds you can get only at RBI, gold bonds. So that's the saving grace there. Futures and options, you have 6 options done at commodity exchange. Jewelry, you have again many options. Commodities, you can trade on physical on 12 on MCX, in real life on unlimited number. Futures an option, again about 90 options for you on MCX. Equity share, there are 1600 companies listed on both the exchanges in India. You can choose to invest in any of them. Mutual fund, 24 MMC and 12 equity mutual funds, so you have a large number again. Index futures, 10 options. Stock futures, 192 stocks, and each stock can have multiple futures option, at least 3 I can remember. Index option, 4 into 13 for each strike price. So there are so many options that you have. So isn't that a very large number to choose from and doesn't require you to exercise some complex decision making? Yes, definitely. So question is, why choose these right instruments from this? If you have so many choices, why not pick any of them? Because each of the type of assets in each type, each offers a different risk range of risk and reward. Let's take simple example like debt funds. Now in debt funds, did you know that there are even low risk and low return like liquid and ultra short term funds, and high risk and high return funds like gilt funds? They're all debt funds, they're fixed income funds, but they are debt funds. And so you have multiple choices within them. And what you need to do is obviously to feel comfortable investing in these places is to again understand the different types of assets, and within that, what kind of investment is right for you. So you need to choose one that matches your risk profile. So how do you choose the right instrument is the question, and that is what we will discuss in the next lecture. So thank you so much for watching this first lecture of choice of right instruments in this course on practical approach for investing personal finances. I hope you can beginning to learn again something new, beginning to enjoy, and I do look forward to see you again in the next lecture.